Well, 2021 has been a big year for mergers and acquisitions, deals, transactions around the world totaling more than $5 trillion after the pandemic led to a drop in activity back in 2020. Well, now companies are likely monitoring new variants and recent spikes in COVID cases while making plans for potential deals in the future. So here to discuss the pandemic's impact on deals is Managing Director and Global Practice Leader at Alvarez and Marsal, Paul Alvarez. Paul, thanks so much for coming on the show. What was responsible for the spike in deals that we saw this year?
Well, there's a lot of things. I like to say it's almost the perfect storm for M&A activity. I think you had, when the pandemic first hit, at least in the United States, the market slowed down. I wouldn't say it shut down for M&A activity from March through, let's say, July of 2020. So you had a backlog of activity there that was driving M&A activity currently. And then on top of that, I think people learned, a lot of investors learned during the financial crisis that some of the best returns and some of the best deals happened when they invested right coming out of the pandemic. So people remember that from last time and they're rushing to transact. On top of that, you had a record amount of dry powder, at least with private equity firms. There's over 1.5 trillion of dry powder that needs to be invested. You have tons of Fed stimulus, as you previously mentioned, flooding the market, record low interest rates, throwing fuel on the fire. And I think one of the other big drivers is the potential impact of tax law changes around capital gains and carried interest that people are looking to get ahead of that as well.
We did see some major executives really sell here heading into year end, facing some bigger tax bills there. To your point, Paul, inflation, I think another thing that's really been on the eyes of many executives across different industries. How much could inflation impact deal making going forward? Did it have any impact on deal making this year?
Well, one of the things that we look at in deal making are multiples. Those are company valuations, and those are at near record highs. So that does have an impact on deal making. Usually as the price goes, as the multiple goes up, you start to see a slowdown in M&A activity, but that's not what's happening here. What's happening is people are paying up for good assets, for good transactions, and then they're averaging that multiple down by doing a lot of smaller transactions going forward. So that's just driving more and more activity. The one thing I also want to mention that's driving activity in 2021, at least the beginning of the year, was the SPACs. The SPAC market coming on the scene very heavily in the first and second quarter of this year drove a lot of M&A activity as well.
Expectations for 2022, Paul, as the Fed does get ready to scale back stimulus and even as COVID cases rise?
It's interesting. When COVID first happened last year and the U.S. at least went on lockdown, a lot of our clients were calling us up and saying, are you able to do these transactions and do your due diligence remotely? And, with the use of technology, it's become accelerated tremendously, but we were able to do the work and we're still able to do it today. So from that perspective, as far as effectuating transactions, COVID and whatnot really hasn't impacted it that much. I think when you look going forward, I think we have some visibility, at least through middle of calendar 2022. When you talk to the investment banks, and we have a large sell side due diligence practice, there's about at least, I would say, 6 months of backlog or pipeline as far as companies coming to market. And then don't forget the things that traditionally have impacted M&A even prior to COVID, such as digital transformation, technological disruption. Those underlying currents are still there. And they're causing a lot of buy and sell side transactions. So even if the Fed starts unwinding stimulus in 2022, and I think they've telegraphed 3 interest rate hikes over the next year, minimal impact. We're coming from record lows here of interest rates. And, even if there is an impact, I don't think it's going to stop. It'll slow down and then ultimately get to a normalized level of activity.
Are there industries, Paul, that you think are ripe for consolidation, right? We see some industries in the stock market and their stocks are trading in packs, right? Whether it's near a 52-week low or a 52-week high, are there sectors where you anticipate we might see a further consolidation here in the new year?
Yeah, that's a very good question. I think the industries that we're seeing, at least from Alvarez and Marsal, I would say industries that have been impacted by the COVID environment, clearly travel and leisure, consumer and retail, automotive and industrials. If you just think, all the things that are impacting those industries, not just COVID, but technology, going online shopping versus brick and mortar. If you just take the automotive industry in general, you look at, electric vehicles, ride sharing, the whole, ecosystem around automotive is changing. And I think it depends on what side of those transactions you're on, whether you're either a buyer to get into a new market or shore up some new technology, or you're a seller where you're, getting out of non-core businesses to focus on your core business.
Knowing that when rates do rise, probably it'll be slow and steady. As long as inflation doesn't get completely out of control, it would seem as if there is time to still get some deals done, probably on the right terms for both parties. Would you agree with that?
Oh, I fully agree with that. And particularly when you look at, let's say, the private equity market, which was responsible for over $1 trillion of the $5 trillion of activity this year, they're in the business of doing deals. And, like I said, people will adjust to what the new normal is. I mean, interest rates used to be way higher years ago, and private equity was still doing transactions. And I think those underlying currents of digital transformation and technological disruption are going to continue to drive deal flow as well.
All right, Paul Aversano, Managing Director and Global Practice Leader at Alvarez and Marsal. Thank you so much for coming on the show. We appreciate it.